Hey guys, welcome back. Tesla had a blowout quarter again, which is something I did not expect because of all the supply chain shortages, nickel and lithium prices increasing. Now, let's take a look at the financial summary for Tesla Q1 2022. We first take a look at the Q4 delivery numbers and the Q1 delivery numbers. Q4 delivery numbers is 308,600, whereas Q1 delivery number is about 310,000. So there is actually not much increase, but we can see that operating margin actually widens. And let's find out why. I think the main difference is the one-time regulatory credit. Tesla is getting about $679 million for this quarter. Revenue is 17.7 billion in Q4 and it moved up to 18.7 billion in Q1. Gross profit 4.8 billion to 5.4 billion. Gross margin increased from 27.4% to 29.1%. Automotive gross margin 30.6% to 32.9%. I think what is amazing is the operating expense. $2.2 billion of operating expense from Q4 actually dropped to $1.8 billion. So I want to find out more about where the operating expenses drop. The operating expenses actually drop while producing more units of car. So this is what I always talk about. Tesla is a fixed cost business. Fixed cost in the sense that you have the same factory space and you have the same amount of labor and the same raw material, and the main difference is the amount of units of cars it can churn out. So through innovation and through improving what they are doing and improving the manufacturing process, they can actually produce more and more cars. And because of economy of scales, if you get bundle deals and everything, if you can secure more and more raw materials in bulk, things will become cheaper and when you improve faster, so your revenue will keep climbing. So the revenue will climb higher and higher. Expenses will climb too, but will not follow at the same rate of revenue. So we know that Tesla's revenue projection is about at least 50% year on year, and the expenses is not going to follow the same. That's the thing. So the profitability is more than 50% year over year, and we can see that this slowly starts to play out in the operating margin, in the gross profit margin. 2021 Q1, just a year ago, is 5.7% operating margin. So for every revenue minus every single expenses, their net profit margin is 5.7%. But of course, the regulatory credit helps to increase this operating margin. But I think, initially what all the Tesla Q have been saying is that Tesla relies on the credit to be profitable. But now it's getting clearer and clearer that they are super wrong on this, that Tesla is a very, very profitable company, and time will keep telling, and time will show that they are getting better and better and better and better. That Tesla manufacturing cars is a cash cow. And after that, when they introduce software revenue, then robotaxi, recurring revenue, insurance, transport as a service and everything. If you look at the financial summary and we take a look at the year over year, the result is amazing. Automotive revenue grew by 67%. Automotive gross profit grew by 132%. Tesla year on year total revenue grew by 81%. Their total gross profit margin grew by 147%. Operating expense only grew by 15%. Their income from operations grew by 507%. So basically their profitability grew up to 5x from Q1 2022 versus Q1 2021. Earnings per share gap is $2.86. Earnings per share non-gap is $3.22. So to me, these numbers were actually quite shocking because Shanghai Gigafactory actually closed the factory down for close to a month. So there was a month of disruption to the production numbers, and there is a lot of challenges. Lithium and nickel prices, these are the elements essential for the battery production, and battery is about 30% cost of an entire car. All these raw material causes actually skyrocketed how many folds, and Tesla was still able to deliver such amount of profitability. So to me, these numbers are bonkers, and so long as Tesla keeps growing like this, and it will follow the path of Amazon, and if a company is going to grow at this rate, even faster than Amazon in fact, people are going to pay a premium. So why do people pay premium? Let's say if a mediocre company that does 10% growth year over year versus a company that grows at 50 to 60% year over year. And let's compare these two companies. Which company will you pay a premium for? Which company will be a higher demand? So in the stock market, there are companies that are losing money, there are some that is very profitable and everything. So Tesla will be one of those companies that is very attractive to be invested in, and people are willing to pay the premiums, and hence they will always be like overvalued in that sense. As long as Tesla continue to perform over the long term, I think it is fine. And I think this is what the people that are anti-Tesla or the Tesla Qs don't understand. So in this financial summary, it proves that Tesla is a fixed cost business. And eventually Tesla will also prove that they have one of the best vertical integration. Vertical integration in the sense that the cars can become robotaxis. The cars can become full self-driving. The cars can drive itself and become an asset to consumers, and consumer will demand and don't mind paying for high amount of cash. When a car becomes an asset, it becomes like people will pay premium for it also. So you have, in a sense, monopoly in pricing. I think that's what many people still don't understand, and what I am secretly bullish on. It's like, will you pay, let's say you pay 25k for a Honda car, but the car is a liability and it's bleeding you money every year, versus paying for a 70,000 car, and Tesla is going to be appreciating in value because everybody demands an asset and Tesla have to meet the demand. I don't think anyone is going to solve AGI soon, and the first one to solve will be Tesla. And we talk about the vertical integration, that the batteries can be used for cars, can be used for stationary storage, can be used for Tesla bots. To solve full self-driving, you need to solve AGI. And when you solve artificial general intelligence, means you are solving the real-world AI. You solve the real-world AI of a car going 100 km per hour. And there are so many things. What makes you think that Tesla bot that is going at 3 miles per hour cannot use the same software? So Tesla is damn good at manufacturing. They are damn good at manufacturing battery also. They are working hard on solving AGI. All this combined can be made into Tesla bot, and Tesla bot don't have to sleep, don't have to sleep, don't have to eat, don't have to take vacation, won't slack. Initially, Tesla bots will be used to replace jobs that are repetitive and dangerous and boring. But after that, when business start to realize the economics of a Tesla bot, more and more businesses will demand all these Tesla bots. I think the future of Tesla is just very exciting. Like, I think this 2022 to 2030 or 2035 is the age of Tesla. To me, how I view about things is I always connect the dots first, and I don't look so closely about the valuations and stuff, because I need to know the future rather than the past. And to me, I see the future as the world economy is $90 trillion, and 80% of this 90 trillion economy is fueled by fossil fuels. And if we are going to go zero carbon economy, all this fossil fuel economy will be replaced by clean energy economy, and there is so much space for green energy to expand. You know, they can bring down the cost of energy, they can bring abundance of energy. And when you are able to vertically integrate the low cost of energy and the abundance of energy and use them on Tesla bots, there is literally no ceiling to the economy. And in that kind of economy, the green energy automation economy, how much will Tesla be worth? So that's why I ask myself, 90 trillion with fossil fuel, or 180 trillion, 360 trillion world economy with Tesla leading the way, maybe even producing 10% of all the clean energy needs. So these are the thoughts that run through my brain, and I just want to share with you guys. So in conclusion, I just want to repeat a few things. Tesla has multiple fixed cost businesses, has multiple vertical integrations. Tesla is changing the way the world works, and the government is incentivizing us to go this way. And that is why I feel that Tesla can go more than $10,000 to $15,000, which is 10 to 15 trillion by 2030. Which may sound crazy to people because Apple is only worth 2.8 trillion now. But I think if Tesla is successful at what they do, I won't see a ceiling immediately. I won't see a ceiling that Tesla will hit, knowing what I know. But they have to be successful at what they're doing, and because of their innovation, work culture, and the drive to make things happen and playing the infinite game, it's like my money is placed on them rather than, let's say, cryptocurrency. I agree. I mean, cryptocurrency has, for me, the topic of crypto, whether or not is it Web 2 or Web 3, I think the users have to enjoy the product more, be it Web 2 or Web 3. So they don't really care about whether or not it's centralized or decentralized world. They want the product to be good. So if in the Web3 and so if Web3 so in the Web3 world, if people can develop awesome products, I'm all in for a decentralized world as long as the product is good. I mean, there's a lot of money to be made in Web3. It's just I don't see like there's like my my focus is not on Web3 now, so pardon me if I don't really care so much about the crypto space, because my money is tied to options and there is no vested interest there. I just want to so that is it for today. So I just want to share my quick thoughts on the earnings, and I feel that Tesla is on the right track. If you enjoy this kind of video where I just sit down and talk about my thoughts, do help me out by liking this video and subscribing to my channel. If you like this type of video where I just sit down and talk about my thoughts, just comment down below. Thank you, and I'll see you next week.